exposure video on myself. The emails I got from that, they said you need to start doing more cardio. You can hear you breathing heavy. What you don't realize is I have two big old blocks of plastic that are in my jaw, and it makes it sound like I can't describe it. It's just, I'm certainly not going to show you a picture of it, but there are two like plastic brick type things in my mouth. And between that and the two screws that go up into my sinuses, which are still swollen, it closes my nasal passages. And between that being restricted and my mouth being full of these plastic prosthetic things, it keeps me from being able to breathe normally. So as you saw me walk around in the video and talking, it was a little more difficult than sitting here, obviously. I'm not a couch potato by profession. I do have cardio that allows me to move around without breathing heavy, and obviously I don't smoke, but I appreciate all of your concern, but it's just I have all this stuff going on in my face and it makes it difficult to breathe normally. So hopefully when the sinuses aren't so swollen, I don't have to wear breathe right strips constantly just to get air in my nose, then hopefully I'll be able to move around without sounding like I'm gasping for air. Alright, so with all that crap out of the way, the dollar index daily chart here. I zoomed out a little bit. You can see this SIBI, sell sign of balance, buy sign of efficiency. Very difficult to say right now. This is an area where I'm expecting to see the dollar try to reach up into. That might need to be rebalanced. And with that in play, that sets up consolidation to weakness on foreign currency. US dollar hourly chart. Now I like this little fair value gap here. I would have liked it more had it been still trading this week. Okay, in other words, if it wasn't the weekend and the uncertainty of where we're going to open up on Sunday, I would have liked to see it trade down, come into that a little bit, and then expect it to rally up. That might be what happens, but it doesn't need to do that. So it's one of those, well, if it can get down here and then react, small little fair value gap, order block, bullish or whatever, that might set up a run into that. Otherwise, as long as we're north or above of this fair value gap, we're bullish on dollar index. That's my view on it. Now, if we go down below it and come back up in, then that may act as a level of resistance, and this might need to be traded to at a later time. So this right here is something to watch. If it trades below this, it may act as resistance and then come down here and trade into this area here. Lots of liquidity resting below here. So if this one fails to hold price up and it acts as resistance, that's a nice little run down in there for about 100 pips or so. For clarity's sake though, I'm still bullish on dollar. So that way we're not misunderstanding one another. So the small little area in here, watch that. If it just drifts lower, or if we gap down, come up, fill in the gap, and then trade down to that level, that would be something to watch as well. I just like the idea of the price drawing up into here. And how we open on Sunday is, like I said, a mystery. It's never known to me how they're going to open up. And you always have to weigh out your analysis and what it may or may not be doing based on Sunday's opening. Euro dollar daily chart. We have an old high here, an old low, and between those two areas we have a mitigation block right in here. So I don't have that drawn, but we might get a little bit of a reaction in here, which may need to trade up into this area there. I don't like the idea of it coming back all up to here. Okay, so if you look over here, see that little gap? On your chart, I don't have it on mine because I want you to have it mapped out for your charts. But be mindful that we are below this, and if we trade up into it, this area here plus this area in here is essentially like a balanced price range. So we could trade up to the 115 big figure or just short of that if it's got to retrace. And then I would expect more potential selling at that time. It doesn't need to do this, okay? But because of Sunday's opening, not knowing where we're going to open, these are just candidates to watch and study. All right, so we have the euro dollar. I'd prefer, so we are on the same page, I'd prefer to see dollar not go lower, just to continuously press higher. And that would be a heavy weight on euro, and it should keep this high intact and then just roll over. Again, gap down, opening on Sunday, fill the gap, and then accelerate going lower. That's the preferred mode of delivery I would like to see for euro. But if it needs to go higher, I don't think it needs to go that much higher than this area in here. Like I said, the 115 big figure has that nice little gap there. So we have this, and then redeliver, rebalance. So it might need to just dig up into this area here and not touch the old lows. I don't want to see that. Everybody else would expect to see something like that. And to me, it's better for it not to go that deep of a retracement. But certainly coming into here, that's reasonable. And retrade back to the 115 big figure, pick up more liquidity and interest in trying to see a low form, and then just sink it lower on a higher dollar. That would be, in my mind, something that would be a favored type of delivery on price. 15-minute time frame on euro dollar. Nothing really to show here except for nice clean highs in here. So there's buy side liquidity resting right there. It would dig into around the 114.80 level. And then that 115 big figure, we see it clearly over here on the 15-minute time frame. Again, better if it leaves it open, because that could be useful in terms of measuring gap, breakaway gap, that type of, well, not necessarily breakaway gap, but for measuring gap purposes, yes. All right, pound dollar, daily chart. And we had the bearish order block, trades up into that, and we broke down. All of this in here, this run from this low to the bearish order block, and then lower than this low, and ultimately below that low. This is a market maker sell model on the lower time frame, which is part of, and it's the second level of redistribution of this market maker sell model. Okay, in the mentorship, I have taught that if you're looking for the highest probability trades, the cleanest delivery, the easiest path to, well, nirvana, it's trading market maker sell models on the second level of redistribution when the bias is still bearish. Okay, so what that looks like is this right here, because we had the smart money reversal, low risk sell, distribution, redistribution, and then it sinks it hard, running out the original consolidation over here. So all of this here is one fractal, but inside of this level of redistribution from this low to this high, this is a market maker sell model. And I said it on Wednesday's video. We didn't do a video on Thursday. I said we wouldn't do one. And I stated that if I didn't get it up by Friday, you would have it before noon on Sunday. Okay, so it's Saturday night here in ICT land, so this should be up by around 11 o'clock at the latest Saturday night. But this distribution level here is part of a larger daily market maker sell model, which on a lower level creates that same market maker sell model on a smaller fractal, reacting off of this bearish order block, bearish bias, bullish dollar, sends it lower. With that in mind, here is that bearish order block. You can see it trades up into that. Here is the original consolidation, accumulation, more accumulation, smart money reversal, low risk sell, distribution, redistribution, then sends it lower. Now this is on an hourly chart, and I'm going to flesh this out because I want to teach you what this looks like and why I was confident with that trade in here on the 10th. On the 15-minute time frame, just to get this time frame out of the way, if we go higher as a deeper retracement, notice that we have these relative equal highs and the sell side imbalance, buy side inefficiency. It might need to poke through that and clean up some of this. I'd prefer to leave this area open, and it can trade up into here, and that's fine. Take out some trailed stops here, and then maybe make an attempt to go lower on these lows, again, with the confirmation of a higher dollar. Now let's go back into that hourly chart because I want to teach you a little bit more about the sell model and how you as a trader will learn the price action model 6 and 7, which is the closest thing out of all the models. And when I say these types of things, everybody gets like, ooh, that's the one I want to do. That's the one I want to do. I want to do what ICT says is the closest thing to his personal trading. Don't hear me say these words, and I'm actually tempted to edit that part out, but I'm not going to because I've already said it before. When I'm teaching those models as a charter, you'll hear me talk like that, but it is an unfortunate thing I wish I would have never said because it forces kind of like a lack of interest on all the other models. And that's unfortunate because, again, I don't go in and edit anything. It is, once you have it in your hands, once it's uploaded to the server and the link is posted, I never, ever, ever edit anything. It is what it is. So when you understand how you can work within the market maker buy model and sell models, the holy grail of these patterns is understanding what the pattern looks like overall. Because if you can see the setups forming in the overall market structure, and what do I mean by that? Well, the daily chart, remember this was the bearish order block. In this low, it rallies up into that bearish order block. It does not matter if you've seen this as a sell. It doesn't matter if you sell short there, because this is the smart money reversal. While you're developing, let these go. Anticipate them, and then let the market prove itself to you. We have a short-term low here. The market trades down below it. Bam! We are now set for the sell side of the market maker sell model. That means the market's going to go down. This is the curve, midpoint. Everything to the left of that, this is the buy side of the curve. Everything to the right of this high is the sell side of the curve. What is the bias? The bias is bearish. Dollar's bullish. So if this is going to sell off, why should it sell off? Let's build some narrative around that. Well, we have the range between this high and this low. So from a PD array matrix, equilibrium is here. We did trade above it here, but is in an area where we'd like to see a deep, deep premium. Yes, right there. And we're at a bearish order block on the daily chart. So we wait to see if price wants to repel from that. And if it takes out this short-term low, think about what we have here. The market traded to a premium. The market traded to a premium PD array in the form of a bearish order block during a time when the market is bearish and bullish for dollar. So we have this macro view in line with a potential sell-off. Where do we look? Where do we look for the best setups? In that shaded area, if it trades up into that and it's a PD array that's a premium, that is like a lead pipe cinch trade, to use my mentor's catchphrase from his 1970s book, How I Made $1 Million Trading Commodities Last Year. Your mindset should be, as soon as this low is taken out there, okay, boom, you go right back to this high, and these sellers, which is smart money, are going to attack these lows for the sell side. They sold short here, taking out buy stops there. They accumulated those buy stops in the form of selling short to them. The buyers above here, who's buying above that? Breakout artists, trailed stop losses on shorts. they get knocked out. Look what's going on. We're bearish. We have a short-term high, and then it runs that high. Remember what I taught you. The best, strongest impulsive price moves follow a stop raid. So if we're bearish, we have a short-term high that's taken out, that's a stop hunt. This could be a turtle soup sell for you, or you could be using the bearish order block on the daily chart, or you could be using the optimal trade entry short here. Think about that. Imbalance, consequent encroachment, trading into that could be your setup. How many setups does this give you there? All of them uniquely different, but still working inside of the same underlying narrative and underpinnings of the marketplace. A bearish breaker here, high, low, high. It breaks this low, trades back up into it. There's your setup. That's your entry. There is your low risk sell. Targeting that down there. And if you want a pyramid, you would put a position on in here, say, I don't know, 5 standard lots. Okay. And as it breaks down, it gives you another level of distribution. After the smart money reversal, you have low risk sell, which is bearish breaker. Then you have, we drop down to a from an hourly chart to a 30-minute chart to get more refinement here. That imbalance, look what we're doing. We're back into that, as I mentioned on Wednesday. So that's distribution. This is the breaker. This is all time distortion. Displacement. Back inside of the imbalance. Optimal trade entry as well. So we're back inside of this area of accumulation before it goes up and hits this level. Once it breaks down, you go right back to the left side of the curve. This is the buy side of the curve. And now because we're on the right side of the curve, which is the sell side of the curve, in other words, when everything should be looking for resistance or premium arrays to sell short from, that's this level right here. Okay, so this down close candle right before the run up, you're matching up the down close candles over here on the left side of the curve with rallies that go into those same levels on the right side of the curve, which is the sell side. So distribution. So that same level of distribution here, now we're looking at on a 15-minute time frame. As this starts to sell off, we have another level of redistribution. So this one here and this one here are very strong candidates for going short, targeting this level on here, which is that old low, where below it is sell side liquidity resting below the original consolidation. So when you're looking at it like this, if I just showed you this chart here and I said, look at this market maker sell model, without stripping it down from the daily chart to the hourly chart to the 30-minute chart to the 15-minute chart you see here, it would be very difficult for you to see this as a market maker sell model. This would just look like a downtrend. Okay? That's why it's important for you to go through your higher time frames and break them down from a top-down approach to the lower time frame, but understanding where these sell models and buy models are expected to form. If your higher time frame charts are loaded for a bias that's one directional, like cable was bearish and dollars bullish, if that's the case, what you're looking for is every opportunity for the higher time frames to sell off after running up, like a swing higher. That whole idea is a potential sell model, just like this is here. From this low up to here, this is a market maker sell model. From here to here is a market maker sell model. Even on this little area here, if you strip it down small enough, I mean, it's probably really forcing the issue, but nonetheless, it's still there. So every time you see a swing higher, you expect it to go lower. That is where you formulate the market maker sell model and find where the previous down close candles were used before the market rallied up to create the turning point at the smart money reversals. Every short-term high that returns back to a level of a premium, which was a buying opportunity on the left side of the curve, should act as a shorting opportunity on the right side of the curve. Now, for the 2021 group that's in here, what I just stated probably went right over your head, and it's going to feel like, man, you just talked in a whole lot of mumbo jumbo. I promise you, when you get into charter, because all the charter members are smiling because they're like, I get this now. I get it. Because you've seen and learned the lessons around the price action model 6 and 7. This idea of going into the price action and stripping down the elements of a trade setup using the market maker sell model here, it gives you the context to work with one side of the marketplace where the setup should form and when they work towards creating additional entry points. So if you went in with a 5 lot, the next entry could be, pyramiding, a 3 lot once it drops down more. So what does that mean? You could sell short here and it comes back down into this level here. That could be another level where you could sell short 3 more contracts, or 3 more lots rather. You can hear the futures trader in me. And then this is another one where you can add 1. So it would be 5, 3, 1. So you'd have 9 standard lots for a run into this level here. That's how you pyramid effectively. You're not taking a 1 standard lot, then 5 standard lot, then 10. That will blow your account. Even if you're right in your direction, you can still get tagged and hurt you. You want to start with your higher portion, but not maximum leverage. Okay, you want to do like something that's reasonable. Like when my competitive margin is used, in other words, what I'm willing to put on as a maximum, it's 4.5%. That's my maximum risk per trade, 4.5%. I do not always trade with 4.5%, but I did it because I'm going to teach this lesson as you hear me teaching it now. I'm showing effective entry, trade management, visibility with seeing where these order blocks and institutional order flow entry drills, which everybody's buzzing on YouTube. They're like, well, what is that? When you watch that video on YouTube, you, as my students here, understand intimately what I'm doing. And I'm doing it in live data, not some rented server, not delayed data. I'm reading it like a book I've read 12 to 15 times, and I know it like the back of my hand. That's because I'm applying the very things that you're learning here. If you can just sit still for a minute, let your mind sit still. Don't think about nothing. If you're watching TV, if you're writing anything down here, stop and just listen to me for a minute. The thing that you're looking for that's in this mentorship, that is in plain sight, and I say this all the time, but you don't listen, okay? You're not grasping it and understanding the importance of it. I teach the market maker sell and buy models because it gives you the very context to find the highest probability trades, the easiest ones that literally leap off the chart, and they're always there every single week, but not every single time frame has them, but they appear every single week. You just need to know, where's the market likely to draw to. That's where the majority of your time should be spent. Not where do I get in? Because that is the easiest part. The hardest part is for you to learn on your own without me guiding you and holding your hand. I'm here teaching every single week with you what I believe the draw and liquidity is in the commentaries. I give you my experience in that regard. I do not rob you of the opportunity and the epiphanies that will come when you go into the marketplace looking at the things I teach you to look for based on that draw on liquidity. So if we're looking down here on Wednesday as a potential draw on liquidity, that is to mean that maybe that this weekly range is going to create the high on a Monday, Tuesday, and continuation on a Wednesday. Well, it just so happens there's the high of the week on Tuesday at that bearish order block. Then we had the imbalance on the higher time frame that we traded down below, came back up in there. That is what? That's your sell. I stated earlier in the week before Wednesday that if we get below the fair value gaps and come back up in, that's going to be your level of resistance, and we expect selling. Okay? So we have the weekly range ideas that I teach here, and then the continuation on Wednesday. What's it reaching for? The liquidity below that low down here. But you're applying the market maker sell model to give you framework, context to use. Okay, if we're going to go down here, that's well and great, But now you ring in, how do you look for the setups to enter the trade? Where will they form? Well, you're at these levels of distribution and redistribution. When these form, you know that they're returning back to go lower. The retracements and short-term premiums applied to the marketplace by the algorithm that allows informed money, interbank traders that are going to see that and they're going to execute on that. It's not all the traders that usually are 90% wrong are buying here, controlling price up here because they're buying, and they all got smart right here and stopped buying and went short here. Think about the logic of what these book writers and educators say. The market tops because it runs out of buyers. No, that's not what it is, okay? What it is absolute control. And it does not matter how many people want to buy it up here. When the price is delivered lower, they're going to be forced to stop buying because it's going to keep dropping. It's not they ran out of buying interest. They are ripped apart. And literally, the market goes against whatever underlying buying and selling pressure you think exists. Ignore that because it's a facade. Here's how I realized this, okay? Now here's something you can write down. Not that you can't write down what I just said because everything I just said was really good stuff, but I wanted to talk to you without being distracted by you trying just to keep up what I said. Go back and rewind the video a little bit and then go back and get your notes taken from there. But I wanted to speak to you without any distractions. But when you're looking at markets like commodities, okay, or index futures, they're very volume centered. Okay, those markets, I like looking at volume because you have real volume figures. You ever notice how the market creates, like here, like you get a high, and then you get a higher high. And volume might be really high on this, and then it rallies higher, but the volume is lower there. Why? Why is the volume lower there? Because that lack of new buying is being reflected in the volume. There are times where you'll see there's a high here, which has a high volume. Then it has a higher high here and lots of volume. But I was taught that volume precedes price. And I teach this, okay? I teach this even in the mentorship and the commodity portions of this mentorship. But the times that you see high volume on this high and then higher volume, okay, when I say volume, it's the actual number of trades that were placed during that time. If you have a high with a higher high and the volume is higher on that one, people that just look at volume would see that as, okay, that's confirming the uptrend. And that's what I originally learned. But it's not always the case. That higher volume is just being reflected with smart money coming in, selling into that rally. So when we have this higher time frame bearish order block up here, I'm thinking that volume being high here and higher here or high and lower here is of no importance to me. I'm not interested in that because either one of those conditions could exist. So I'm not looking at a volume idea, not that I would anyway because this is pound dollar forex, but if you looked at the British pound futures contract, and I didn't do this, so you might want to do this for yourself, look at the volume on bar chart and pull up the futures contract for British pound and look at the price action on the 9th on a 15-minute time frame and then apply volume to the chart and look at the relationship between this high and that high and see if the volume is higher or lower just for your own observation. But because this was an underlying bearish PD array, or premium array rather, this whole idea of looking at volume or that markets top because it runs out of buyers or there's an increase of sellers coming in is absolute nonsense. That's not what this is. And you're led to believe all these things. The problem with this is going just to volume. How do you reconcile that? You know, when you have volume that could be interpreted as high volume here and lower volume, there was less trades up here versus if the volume is high and an even higher here. How do you reconcile that? See what I mean? So it creates an opportunity for two camps to say, my method works, when neither method is even the basis of why the market's turning here. The bearish order block within the bearish market condition and environment's bearish, and we are inside of the peak or smart money reversal of the market maker sell model on that daily chart. So I'm demystifying, okay, everything that everyone on the outside says, oh, I'm overcomplicating, I'm renaming this. No, I'm stripping and peeling away the onion one layer at a time. And I'm going to take you down to the sweet center of the onion. Okay, not the dry, flaky stuff that you choke on if you were to eat it. I'm taking you to the heart of the matter. And when you get inside what these price action swings and moves are doing, it removes all the ambiguity. It removes the uncertainty of what it is you're looking for and why you're going to execute and engage. The video I posted on YouTube is just like I do all the time. I create examples and I show it publicly. You get the inside interpretation. They just get the flash. The, wow, that was really good. And everybody around the world that's not here will swear up and down that I'm just doing the best trades. Well, even if that was the case, okay? Even if that's the case, why is the logic always based on the things that you are learning here? Surely I'd be off on something, right? If it's just me trying to get right and I'm doing two screens, which is stupid because I can only show you one screen with my trading view account. I am ICT. That's my thing, okay? When you trade on that currency, whatever you're showing a position on, you can't create another trade in the opposite direction because it's going to show you the position that's open in that currency. You follow what I'm saying? So every excuse these people have that are not in this room, or not room, but in this community, they can't figure it out. When you guys know exactly what it is I'm doing, but you're seeing me do it live. You're seeing me do it as the market is living and breathing and it's doing what it normally does. And I'm reading it like I've seen it happen dozens of times and I know what's going to happen before it happens. Because of the things I'm teaching you here, you're learning how to do that. Do not feel slated like you can't get it right now, so therefore you're never going to get it. It took me a long time, folks, to get this. A long time. And even after 6 years when I figured out what it is I wanted to do, I got better as the years went by. So don't think that when I say 6 years I figured out what I was doing. It took me still time past that 6 years to get really refined and good. So all of you, I got charter members that rushed through in the 2021 group because I allowed accelerated payments. I tell them, you're welcome to do it, but you're never going to retain everything. And they're creating threads in the charter area. I feel lost because there's no way you're going to put down 1,100 videos and digest all that. You're not going to do it. Okay. No one has the mental capacity to watch what I've done in the mentorship, all the commentaries, all the supportive studies, backtest all of it, look for it in your charts. There's no way any of you can do that. And it's not a surprise to all of us and myself, and it shouldn't be a surprise to those of you that went through the accelerated payment program just to get the charter faster, to make a thread on the forum and say, I'm lost, I don't understand this, because you didn't listen. You're trying to expect full understanding just because you purchased the videos and watched them like Netflix. You can't binge watch this stuff. You have to watch it with note taking. Once you note take, go away from it for a little bit and then come back to it either the next day or later that same day. Like if you're going to watch it in the morning, any video, if you watch it in the morning and you have time to go back to it in the evening, that's good. But when you watch the first time, you watch it with taking notes. Then watch it a second time. I'm not making money off the views, folks. Okay, I'm not asking you to do this because I'm getting ad revenue. It's for you to learn. It's your edification. So by doing this, what happens is you've already taken down what initially drew your attention for the note taking. The second pass through the video, you're going to hear things that didn't really register the first time. And it may create a question or answer in a concern or a doubt that you may have about something. Okay? And that's where the real learning starts to happen, because you're not just watching, you're absorbing. Okay? And when I give you skill set ideas and drills and things to do, or things to look for as a signature in price, those things are what you're writing down in your notes, in the journal. By you writing them, your subconscious remembers it. And by repetition, you're going to hear me say certain things throughout this mentorship and in these commentaries. Because of the redundancy of it, it sounds boring because you're just watching it like Netflix. If you watch the same episode of a Netflix series, okay, if you watch it multiple times, you're not going to be engaged. You're going to be put to sleep. No matter how good looking the woman is, no matter how action figured the guy is, and how many times he shoots the gun, you know what the outcome's going to be. So you're not as entertained, you're not drawn in. So if you treat my videos here, even on YouTube, the same way, and you're not really trying to draw out the information because, oh, it's boring, well, that's not my problem. That's your perception and your laziness, okay? And that's why I like to say many times, I want to grab you by the lapels and just shake you and say, wake up and just listen. Listen, take notes the first time, and then go back into the video again. Because you're never going to learn this stuff going through the mentorship videos one time. It's not going to happen. None of you, not one person is going to be able to elevate themselves just by one pass through. It ain't going to happen. It's too dense. It's too much content. Do you need everything understood for you to find your own model? Absolutely not. But if you focus on the things I'm teaching and showing you in the commentaries of why I'm looking for certain things, and when I show you examples of me executing, proving the concept, proving visibility, I'm typing it in, okay? I'm typing it in through TradingView, what I see before it delivers, and it, boom, delivers like perfect artwork. That's not bragging. That is a testimony to understanding the very thing, the craft that I'm giving you, that I've spent my entire life working on. Once you understand these elements, it removes all that rush. I need to do it right now. Or I'm getting uncomfortable because I can't do it. I should have learned it by now, because everybody over here on YouTube is talking about how it takes 2.5 years or 7 years or 10 years or whatever. These are people that complain because they never would have gotten it anyway. Period. That's why they dropped out. They are weak students. And it's not because they're just weak here. I guarantee you they're weak in every aspect of their life. And that's why I teach you holistically, across a whole broad range of things, how to treat yourself emotionally, psychologically, how to manage your fear and emotions, how to balance greed and fear of missing out. All those things are normal. They're normal things. But when you study the market maker models and the price action models 6 and 7 as a charter member, it gives you the very framework that I used in that cable trade. And it was perfectly delivered. It was like exactly what you expect to see in my hindsight charts, where I say, what do you see? But I see it before it delivers. That's what you're learning here. Do not make threads in the forum and say, I'm upset with myself because I'm failing and I should have done this because I've done 2 years and I should have gotten it by now. Who says that? Who says that? Who said that you should have gotten it by 2 years? When I've already told you as your mentor, it might take you longer, and it's normal. But if you constantly feed yourself negativity or listen to yahoos on the internet that say they have something sweeter and better, go do whatever they're doing. If that helps you, then forget everything I taught you. But if you see me showing you what this stuff does and how it works, and I can do it, because I have the experience. The only reason why you can't do it yet is because you don't have the experience, which is what mentorship is. I'm lending you my experience. I'm showing you what it looks like so that way you see it, you see that I can do it, and it's precise. It's precision. It's artwork. And it's fun. When you know it's likely to deliver. If it's not likely to deliver the second level of distribution, or in this case, redistribution, and you're looking for a sell-off, you're probably not going to get these nice, sweet drop-offs in price. You're probably going to get stagnant price action, maybe even be a losing trade. Now, do you see the distinction there between, all right, I think it's going to be down because it was at a bearish order block, or this is a price leg that's in the sell side of the curve. Once we broke this short-term low here, bearish breaker, in your mind, you're thinking every short-term rally is a selling opportunity if it's in a kill zone. Boom, there you go. That right there, folks, that right there fits on the back of a business card. That's your trading model. Done. Now, how are you going to get in? What's your favored entered trade concept? Like, what is the entry mechanism for you? Well, let's go through a few of them. The bearish breaker, okay. We have the optimal trade entry in here. The fair value gap being rebalanced to here. This area here, breakaway gap. In here, fair value gap trades up into that with another level of redistribution. There you go. There's another selling opportunity. Institutional order flow entry drill. There. Breaks down. Bearish order block. We open on this candle, trade deeper into the candle here. Sells off. Okay, fair value gap in here. Trades up into it on the discount low. There's an opportunity to enter there. And then another opportunity in here and sells off deeper into the retracement of the liquidity that rests below that old daily low, which is far over here to the left. If you train your eye to see a market that rallies up to a level you expect selling, then it starts to break down and you see this area right in here, that is displacement. The algorithm is flashing that. Okay? It's like a broad neon sign saying, interbank traders, get ready to sell short. When I reprice back up in that range, it's at a short-term premium. Sell short. And aim for the liquidity down here. That's what the algorithm does. That's what all of these electronic markets are doing now. It cannot be argued. It cannot be defeated with, I don't believe it because it wouldn't work that way and they can't control this. Who can't control what, man? Seriously, who can't control what? You have cable? You have satellite TV? Who controls the options of what you watch at what time? You don't. They do. Who's they? The owner of the company. They make that market. All of these markets have controlled mechanisms, and they are not going to leave these markets, especially a currency, to chance collapse. Think about it. If every single person in the world that gets in these markets and trades them had the ability to muscle them, like, I can't think of the group on Reddit. I think Wall Street Bets or something. I may have that wrong because I think they're silly. But the group that thought they were going to muscle GameStop and BlackBerry and AMC, they're going to corner the market. Look what their stocks have done. I told you to stay away from them. And they have been just chopping people up. We, as the ants, cannot move these markets where we want them. We might create a little short-term blip in the futures market because of the volumes that are created there. But in a currency market like this, you are absolutely not controlling anything. Wherever you're entering, you're getting filled based on what the market price is being offered from the central bank, period. Separated by the spread of your broker. that dealer. He's not a market maker. The central bank is the market maker. So when you strip all this away and you throw all the facade of all this nonsense, this retail crap, these things that they want you to believe, oh, it's a net sum zero game. There's a winner and a loser, and it's always going to be based on buying and selling pressure. It's hogwash. That is the biggest load of malarkey there is. It's absolute nonsense. And as soon as you just place that stuff down and no longer hold on to it and accept the fact that these markets are absolutely manipulated and controlled because the currency is the commodity of the bank. Why would the banks give control or the opportunity to manipulate where these markets were going to go and take that control and power from them? You honestly believe that these folks that have placed these banks all around the world and created these currencies, which are nothing but an illusion, you think that they're going to let anyone take the control out of their hands? Come on. Like, that takes more faith to believe that than it does when you just strip it away and say, okay, here, I'm going to prove this to you for years. I ain't been doing this just for a couple weeks, folks. I've been doing this for years. It's documented in here. Everything that I'm teaching you repeats. But the problem is, most of you, and this is predominantly going towards the 2021 group, you are forgetting that this is not going to happen for you right away. Because the rushing aspect, the impatience aspect of your development is eating on most of you in that group. Like you feel this mad dash. And that may be because of the world's current environment, and maybe you're about to lose your job, or you fear losing your job, or any of those types of things, okay, and you feel like you have to learn how to do it right now. You need to relax. You just got to slow down and relax, because the markets are real quiet right now. They're not going to stay this way. And when it creates these wide gyrations, you're going to have a whole lot more market maker models. And that creates salad days, easy trading, real easy trading. But when the ranges are small and tight and it's just a real quiet marketplace, it forces you to scalp. And it's unfortunate because a lot of you aren't going to want to do that type of trading. So it feels like, oh, this is broke, or the concepts don't work, or this, or it's that. When you just aren't able to see because of the experience, which is the reason why I tell you have to go through a full calendar year to see what the seasonal impacts are. Then, while doing this and studying it for a full year, I'm teaching you components and conceptual ideas modularly that lead to a trading plan and price action model in Charter. And then, once all of you now, that are 21 group, once you become Charter members, then I will go back to doing the algorithmic theory for the remaining models. I've only done the first one. Okay, so once we're all Charter members here, I have the groups split down to smaller ones because you're all going to, well, not all of you, but some of you in here can't wait for me to do that because you want to share or you want to sell. There's a lot of people waiting for that, okay? I'm going to get you, okay, because it's in groups of 10, and it will not take me long to figure out who you are. So there will be another wave of purging, and that wave will just miss out on the continued teachings in this community. But knowing that this is the heart of the mentorship, looking at when is it the highest probability? It's the second leg of distribution on market maker sell models. That's the easy setup. And if you find this fractal on any time frame, you're going to find that that's the best one. That's the holy grail setup. That's the one you're looking for. That's the one you're waiting for. Now, there's other opportunities, obviously, to trade outside of that pattern, but that's the one that I gravitate to because it's just easy for me to see. I don't have to do a lot of work, and I'm doing all these other things, so it just allows me to jump right to it. And I'm looking for that, and it's going to be the highest magnitude in price delivery. It's going to spread and run farther and faster because of the general nature of that pattern. The algorithm is rushing quickly to get down to that liquidity. They don't want traders to say, oh, this is probably going to be a short. They don't want to give it an opportunity for them to flash and say, oh, well, let me get short too. They don't want that. That's why they program the algorithm to move quickly. You're going to see it as everybody sees this. The algorithm's going to end up getting broken because we all learned smart money concepts from ICT. Wrong, 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 wrong. This stuff is not going to change. Okay? If they move everything to one currency, it won't make a difference because there's going to be commodity markets. There's going to be index futures. Okay? This stuff works everywhere. Everywhere. Okay? There's certain nuances that are in Forex that are subtle and are very characteristic to that asset class. But what I'm teaching you from a price action standpoint and how the algorithms work, it's the same across all asset classes, except for crypto. Okay, which is, again, why I don't touch it. I do not trade it because it doesn't have these signatures repeating all the time. If it ever did, I would probably be the largest crypto trader on the planet because I would go all in because they move around a lot. But they're moving around in ways that doesn't make sense to me. So I can't trust it. I can't allocate funds to something like that because it feels like playing Keno, okay, or lottery. So when we're looking for opportunities in the marketplace like in Forex or futures, that second leg of redistribution when it's bearish, that is the sweetest candy to be taken with no opposition. And don't think because it's shown on the 15-minute chart here that you can't find it on 1 and 5 minute charts inside of a 60-minute candle that's bearish, because they're there all the time. That's why I said on my community tab, I don't need to wait a long time for a setup if I'm going in there to beat the brakes off of somebody. That's how I can run these accounts up real quick, because I'm looking for that phenomenon that repeats on all time frames when I have a clear draw on liquidity. Before I even sit down in the chart and consider entering anything, I want to know what's it reaching for. You know this, folks. But the question I want to ask you is, how often is that the first thing you're looking for? Many of you in the 21 group are rushing for the entry, and you want to see what happens once you get in. That's why you're failing. That's why you're floundering, because you think that's the mystery. That's the not the mystery, but that's the solution. When the mystery is that you need to know where it's drawing to. Where's it likely to go, and why should it go there? That builds bias. Once you have that, then you wait for market structure to get you in sync with that bias. You just don't say, okay, bias is bullish, market structure is bullish. Okay, what are you waiting for? You're waiting for that second level of redistribution if you're bearish, or second level of reaccumulation if you're bullish. That's the holy grail. That's the secret recipe. That's the silver bullet. That is the friggin' thing that you all need to know. Because if you know that, it doesn't matter what anything else I teach you. It will just amplify that setup. That's the thing. When I run these accounts up all the time, when you saw it on MT4, it was not a rented MT4 server. Okay, that was garbage lies. Okay, there is no evidence whatsoever that I ever did that. I didn't need to do it. And why am I able to do it on TradingView? Do they have TradingView rented servers? No. Come on. What am I doing? I'm doing that. That pattern on all time frames. 1 minute charts, 5 minute charts, 15 minute charts, 30 minute charts, hourly charts, 4 hour charts. That is not hard. What's hard is for you to grasp the fact that that's what I'm doing. And that's all I'm doing. I'm looking for that unicorn pattern that evades everybody else's perception and price. But it's there if you know what you're looking for. Everybody out there talks about market maker sell models, and they look at this and look at that, and they want that smart money reversal because, well, smart money. That sounds like they're the upper echelon. I don't need to enter there. I can, but I don't need to enter there. You don't need to enter there, but you need to understand that that is what it is. And once the market proves to you there, that's your real break in market structure. How do you know when the market structure is really broken, Michael, and not just a retracement for stops? What I'm teaching you here. Folks, listen, I'm literally compressing. For some of you that are in 2021 group, it's going right over your head, okay? I know that some of you might be thinking, wow, this does make sense, and you still really don't got it. But the folks that have been in 2016, lessons like this really gets their juices going, okay? 2018 group, 2019 group, they're like, hell yeah, this is it. Because what I'm doing is I'm compressing, okay? I'm compressing the logic of what this mentorship is. I could teach you how to trade just like I do in about 3 to 4 days, with the assumption that you understood all of the components individually beforehand. Then when I talk like this, that's why the folks that are from 2016, 2017, 2018, 2019, maybe not so much 2020. I don't have that confidence in that, but the 19 to 2016 group, when I teach like this, it should really resonate with them, because what I'm doing is I'm compressing all of everything they've been introduced into a conversation that literally can be written on the back of a business card. And it will be meaningful to them. Whereas if I took this and wrote this out, you're not going to understand it as a new trader or a new student. I could literally do this, and I'm feeling actually very tempted to do it just to put it on my YouTube channel this coming Saturday. To say, here's my model 6 and 7 trading plan. Here's my business card. There you go. And it will be looked at as, this is cryptic. He never really teaches anything, which is nonsense. Because you will, if you understand everything that's been taught here in mentorship, it will be like an inside joke. But you'll get it. 21 group, probably not. But you're learning all those things through the core content. When you become charter member, you'll see those price action models and trading plans, algorithmic theory, and it'll compress and bring everything together for you. But I can't talk to you if you are a baby in your understanding. And I don't mean that to be derogatory. I'm not trying to say you're a child. Okay, but let's be honest, folks. If you don't know what these things are that I'm teaching you, and you're in the mentorship 21 group, and your first time being introduced to this stuff, it can be a little intimidating or very easily lost in the conversation, because it sounds like I'm just talking to fill up the time, when I'm not wasting any time, and I'm not wasting or mincing my words. I'm going right to the heart of what it is that you should be learning here. But because you don't have supportive studies, experience, and lessons behind you, properly studied, not just let me go through this month's content like it's a new Netflix series, you're not drawing like your body draws nutrients out of the food you eat, okay? If you're just woofing the food down, you don't chew it up real good and allow your body to digest it well, you're not going to get the nutrients out of it. Same way, okay? You have to chew on this content and really draw out the nutrients that are there. I'm obviously giving all kinds of analogies, but it's just like that. And once you strip down the whole entire thing, the whole thing as a complete collective thought and mindset, then it's easy to go in and see what I'm showing you here. It's not just simply, oh, it's a overbought situation in a bearish market. No, it's not. Because you can go back and look at situations like this, and it may not be in a market maker sell model. It might be in something entirely different. And that might not be a trade idea that you would